In this video, we're going to talk about Lucid Motors, trading under the ticker symbol LCID. Before today's video begins, if you like my content, please consider to like, comment, and subscribe to my channel. So we're going to talk about whether Lucid at this current stage is a good investment to go in now, and if so, how much you should buy and for how long. Lucid is a high-end EV manufacturer introduced to the stock market via a reverse merger with the SPAC CCIV, and it was treated as one of the most significant IPOs in recent memory. The stock of CCIV, now trading under the ticker symbol LCID, reached a peak of more than $50 at one point and went into a long cycle of sell-off. The stock reached its bottom back in May of 2021 and is now slowly regaining some of its former glories. The stock recently had a lot of bullish momentum in the press, partially due to the fact that it is about to release its first high-end sedan called Lucid Air. Lucid Air has a very long range for an EV, and this has really hyped up EV enthusiasts as well as investors, and gave investors enough reason to take another look at the stock. In terms of the price action, the stock has been trading in the range between $20 and $25 with a ceiling at $27. The stock is currently looking to possibly break through that resistance, and if it succeeds doing so, the stock can really recover a lot from its former glories. Over the past 10 days, the average trading volume is around 40 million shares, which is very significant for Lucid. This means that there is a real demand for its equity in the near term, and that it should be taken seriously. With that being said, we have to consider the possibility of a significant pullback as well. First of all, the bulls may take a break before pushing the stock further, simply because shareholders may choose to cash in some of their gains before continuing. This may result in some mechanical price adjustments to the lower. It was the case during the trading session on Friday, so definitely don't panic if you see this after buying some Lucid shares. Another possibility is that the stock may actually go lower after the sedan is delivered. This is because the stock may sometimes decide to sell the news after the sequence is completed. Again, that is completely normal and should actually be viewed as an opportunity to get in when the price pulls back from those reasons. Overall, I think that Lucid is on a positive track to get higher, and the resistance of $27 is something that we really need to watch after closely, because once it is surpassed, the stock can really go to places. My recommendation is to buy Lucid shares for up to 5% of your portfolio and to start to cash in profits when the unrealized gains reaches about 30 to 50%, depending on your risk tolerance. Looking at the current environment, I think that we have to be careful with having exposure in equity market. The market has been predicted to go eventually through a massive pullback or recession after the QE years and the drastic increase in asset prices and the corresponding decrease of their yields. We should remember that the market doesn't mirror the economy, because otherwise the market would also trade sideways for well over a decade. In 2020, we saw another big push in the asset prices, and this time not just for the blue chips, but also the growth stocks. Because we have to remember that it is really in 2020 that a company like Tesla, an otherwise kinda sorta struggling company when its stock price was in the hundreds, saw its stock price skyrocketing into the thousands. There are, generally speaking, two explanations. First, the money from the QE years is now stagnating because in North America, this tab has dried up, and in EU, they are wrapping up their quantitative easing. So new money printed from the cash machine will not necessarily be the main drive after higher asset prices. However, this decrease of new money is partially compensated by the increase of geopolitical tension across the world. And the more tensions there are, the more money there tends to be, and the more capital there tends to be flowing to the US, because it is so perceived as a safe haven for capital from different countries, especially the ones that are currently seeing turmoil or social unrest. What that means for the market is that the degree of uncertainty will increase over the next couple of months and years, especially as the expectation for a recession is building up after the Great Party of 2020. And the recent announcements from US Federal Reserve about a possibility of recession coming down the pipeline, as well as the buildup of economic difficulties around the world, definitely are contributing elements that make me feel that for Lucid, it's better to keep your exposure below 5% of your portfolio. As for the rest, you can either stay cash rich or invest in some sort of fixed income vehicles. As for the rest, you can either invest in some blue chips, so utilities, REITs, and so on, or corporate bonds. Or you can just stay cash rich, just in case that there is a bottom to scoop. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.